Hi, this is friend Cappelleri from CappThesis. Today, we're looking at the three most important charts for Thursday, June 22nd, 2023. And if you like this content, give it a like and subscribe, and you'll be notified whenever we put out a new video. So let's get into it here. So we're starting off here looking at the most recent pullback in the S&P 500. And as we can see that it's pretty small, 2.1% just over the last few days. And so it's a three-day losing streak, of course, but in terms of how big the decline is, it doesn't even register amongst the largest we've seen, of course, going back to 2022 when things are really got out of hand. But in general, this has really been the theme now since the beginning of the second quarter. And so the most recent pullbacks both happened in May, and both were about 3%. And of course, they were very shallow as well, and got gobbled up very quickly by buyers looking to buy the dip, which of course they did, and we know the result. And so something really has to change on a more material basis for the market to suffer more than it has, of course. And so when this has been occurring, another streak has continued as well. And that's the fact that we haven't had a 1% decline now in 19 trading sessions as of yesterday. And that goes back to May 23rd, last time we had a 1% decline. And that's getting close to the run we had from March to April here, 22 days. Both of them are longer than the longest streak we had back in 2022, which of course came at the tail end of the failed bear market rally from the summer of last year. And so again, not too much longer than what we saw back there, but the more important thing to consider here is that these are happening close together. And anytime something good or bad for that matter happens in a cluster like this, that means that things could be changing or that the trend is getting stronger here. And so that's what we're looking for. Now, consider the fact too that during the best runs we've had over the last few years, streaks without 1% declines have gotten much longer than this. And to give you just an example, in 2021, the streak was 37, or the longest streak was 37 straight days. In 2020, 29. From 2019 to early 2020, 74 straight days. 2018, we also had 74 straight days. In 2017, 112 straight days without a 1% decline. And from late 2016 through the beginning of 2017, 109 straight days. So as we can tell, when things start to really get going, momentum takes over, and something that looks like this can turn into a much more substantial uptrend. And so lastly, this pullback is coming after the S&P finally tagged this upper line of this upper sloping channel, just like it did two other times since the lows here. Now, the pullbacks here, of course, were 8 and 9%, so much longer, much bigger than we've seen so far. But again, if this is really changing, if the market character is changing and we're going into a more of a mature, trustworthy uptrend, then the pullback won't even have to get back down to this upper line, and it can maybe have some sort of support in the middle here. If you look back, 2021 is kind of what happened at the beginning of the year, where we had this uptrend. It was kind of running to resistance around here. And then when we had the bigger breakout in April, it really took it to another level and then continued higher again until the end of the year. So those are the things we're looking for over the next week or two. We'll be back on another video soon. And don't forget to read this full report and many others like it. Please visit CappThesis.com and you can sign up for a 30-day risk-free trial. Thank you. See you next time.